Hey everybody, happy Monday, January 14th. It's Rick Mount, the Mike Hardy and Rick Mount team, part of Paradigm Mortgage Group. Hey, there's a lot going on out there, and as some of you guys know me well, I'm a big Green Bay Packer fan, so I'm still reeling from that big loss to the Niners on Saturday. But I want to wish all the teams that have made it through to the playoffs a little good luck. Hey, so we're in a new year. We have re-elected a president, Congress, and the Senate. Republicans and Democrats alike have passed an 11th hour, maybe even as close to a 13th hour bill to help extend and prevent us from running off the fiscal cliff. So that's had a lot of impact on the market. So I'm going to pull up some charts today, kind of walk you through what we're looking at and the impact that it's having on the market. So this is a Chinese candlestick chart. Basically, it shows us how mortgage-backed bonds have traded. We're looking at a 3-month average. So you can see we've had a little volatility over the last 3 months that wasn't present at the beginning of the year. So this big red mark over here, we're going to look a little closer over the last 10 days, or let's actually go to the 1 month here. This was January 3rd. So what happened January 3rd? We had a fiscal cliff avoidance, but then the Federal Open Market Committee meetings minutes were released, and in that they talk about not continuing to buy bonds and mortgage-backed securities in as great a volume as they have right now. Well, the mortgage-backed bond market did not like that, and there was a big sell-off in the bonds. When you see red here, what that means is the bonds aren't trading well, and that causes the interest rates to increase. So we had a big sell-off on that day, but then you can see the market kind of came back to its senses over the last few days. We had a little bit of turbulence last week, but then we're back into positive. So we're trading in a very narrow range still here, but we expect, and most of us believe, that we've kind of seen our lows. If you go back over the 3-month history, we've really seen a lot of choppiness in the volatility, but we got back here at the end of November, probably our all-time high for the mortgage-backed bonds and how they trade, which means all-time low for interest rates. Since then, we've had some pretty consistent sell-off, and we've moved up a little bit. We think that's going to continue for the rest of the year, and so most of the time we're looking at protecting our clients. Let's look at what's going on this week that could drive the market real quick. There's some things that get released. It's a kind of quiet week, but there are a couple of things in here that we're looking at. The producer price index and the consumer price index, both of those are indexes that the market looks at to help keep track of inflation. We'll pull that up right here. So producer price index is the measurement of inflation at the wholesale level. It includes wholesale price increases or decreases. They generally bleed into the consumer price market, and it's kind of a leading indicator for the CPI that we talked about, the consumer price index. So the consumer price index isn't released until Wednesday following that wholesale price index, but this is the core measurement of inflation that we keep track of as the economy is expanding or contracting. There's a couple other things like the housing index, the housing starts and permits, which is a leading indicator on how the housing market's doing. Obviously, weekly job claims come in on Thursday, and then a couple other charts that many people follow to kind of see what's going on. So the lock advice that we're giving to our clients and what's going on out there, we really think that we've seen the lows. So if we're happy with the rates today and the program and the pricing that we're getting, we're advising most of our clients to go ahead and lock their loans in. So you can see right here, closing in the next 7 days, 7 to 15, 15 to 30, and then again closing 30 plus. We're looking for the market for slight improvement. Today the market is up a little bit, causing rates to gain a little bit momentum and be better for locking. So we're looking to lock on days like that. So as always, we're here to help. If there's anything that we can do, please give us a call. Let's make it a great week, and we'll see you on the other side.